Hey, I wanted to share a very cool chart with you that you could share with your buyers, that you could share with somebody who is saying that it's too expensive to buy today or that rates are too high. Show an example as to why it makes more sense to buy today, as to why it makes more sense to buy in a market with higher rates, because numbers don't lie. Math is always the equation to everything. So if numbers make more sense, then regardless of what the rate is today, it's still better. So let's take a look at this. Let's go into it. In November, today's November 16th. In November, if we're doing price and comparison, 6 months ago, if there was a house that was listed for 500,000, there was no way you were buying that house at 500,000. There would be a bidding war. There would be no mortgage contingency. There would be no kind of contingencies whatsoever. You couldn't even do an inspection contingency. So with a bidding war, I've seen houses that starting at 500, I've seen houses be 100, 150,000 over asking price. So we're going to go on average of about 575,000 as a sales price. So you were paying by $75,000 for that house that was listed at 5. With a 10% down payment, you were at 57,500 down payment. The rate 6 months ago was at around 4.5%. That gave you a monthly payment of $26.22 plus tax, plus insurance, and plus PMI. Sometimes you had to pay a higher PMI because the property wouldn't appraise for that amount. But let's take a look at the difference today as to what that same exact house would be. So a listing price could still be 500,000, but today you have a negotiating power where you go and you actually get it below listings price and you can get contingencies. But let's just say you get 10% off, you get that 500,000 listing at 450,000. At a 10% down payment, which is only 45,000, which again, you're saving 12,500 just in the down payment aspect. Even with an interest rate of 6.5%, which is 2% higher, yes, it does sound higher, but even a 2% higher interest rate, look at the monthly payment difference. You have $25.59 as a monthly payment. So you're saving $60, $70 every single month on even with a higher interest rate. But the best part is, I pointed out, is that you could waive the PMI, and the way PMI gets waived is if the house appraises for a higher amount, if it appraises close to what the asking was, and there's still comps from 6 months ago that appraisers are using, if it appraises higher, there's a way to waive the PMI. So realistically speaking, you got a payment of $25.59 as opposed to 6 months ago. This $26.22 payment with PMI would have been around $2,800. So you're literally saving about $150 every single month, paying a higher interest rate. Now, interest rate doesn't carry prepayment penalty, so you could refinance. You can come into a later on. You could refinance into a lower monthly payment. But if you still wanted that 4.5% interest rate, that 2-1 buy down program that I've been talking about, you could get a 4.5 today. The first year would be a 4.5, the second year would be a 5.5, and then go back to 6.5, assuming you don't do a refinance. But it still makes a lot of sense to buy today as opposed to that 6 months ago. You're still building equity. It's still better than renting. So I really want you to share this form. I really want you to share this graph with, if you need this graph specifically all put together nicely, I'll be more than happy to share it with you. Just email me, ask me for the form. I'll send it to you directly. But it makes a lot of sense to buy today, even with higher interest rates than it did 6 months ago. Any questions, or if you have any specific scenarios that you need me to work on, I'll be happy to do so. Let me know. Talk to you.